Cash flow issues are one of the biggest challenges entrepreneurs face. Many entrepreneurs fail not because the product was faulty or the service was poor. It was because the entrepreneur did not know how to manage cash flow. Now, the entrepreneur is partially to blame because they did not surround themselves with the skill set that they needed. And they're also partially not to blame because they don't receive financial education. Therefore, they didn't know what questions to ask and what kind of services or expertise they needed. Today, you and I were going to hang out and discuss the top 10 reasons why businesses struggle with cash flow. Okay. And because I love you so much, I'm also going to provide you the solution. Hi guys, I'm Manu and welcome to another episode of Sweet Money. I'm a Canadian and US CPA. I've got a cool little accounting firm, better known as Shandel CPA. Before we jump into it, I want to provide you with some stats. Now, keep in mind, these stats are for US businesses. Therefore, my fellow Canadian brothers and sisters, I suggest you discount these stats because US businesses in general do better than Canadian businesses. 82% of firms fail as a result of cash flow problems. 70% deny or ignore their weaknesses, refusing to ask for assistance from others who possess such skills. 34% of small and medium-sized businesses who are receiving late payments claim they must use overdrafts to fulfill their responsibilities. Concerns regarding cash flow keep 69% of small company owners up at night. More than 2 in 5, 43% of small business owners with cash flow issues have been at risk of not being able to pay employees by their assigned payday. 77.7% of accountants for small businesses provide value-added services like cash flow. 40% of small business owners say that taxes and accounting are the most difficult aspect of running their company. Now, whoever thinks running a business is full of roses and sunshine, you better think again. Now, look, I promise you, you fix these 10 aspects of your business and you will see instant improvement in your cash flow. All right. And at the end, I will give you the sweet solution to these 10 mistakes that you're making on a daily basis. Number 1, poor cash flow management. Look, it's simple. Entrepreneurs often fail to track their cash flow properly, leading to overspending or insufficient reserves to cover expenses. In simple terms, it's complacency and lack of management. Slow customer payments, account receivable issues. Look, late paying customers can cause serious cash flow gaps, right? Making it difficult to pay bills, employees, and suppliers on time. High overhead costs. Excessive rent, salaries, utilities, and fixed expenses can eat into available cash, right? Especially in the early stages of the business. And I have seen people drive cars they definitely cannot afford. I understand the insecurities and they want to look more successful than they actually are. But at the cost of not being able to sleep at night, it's not worth it. Overestimating revenue projections. Many entrepreneurs, especially those who are jumping into entrepreneurship for the first time, are overly optimistic about sales growth, leading to overinvestment or underestimating cash needs. Excess inventory. Tying too much cash into inventory can lead to liquidity problems, especially if the products are not selling. And the backbreaker is if the products become obsolete or they expire. And a classic example in recent history are these darn face masks. Underpricing products or services. Look, I understand. You start your business, you want to see traction, you want to see footsteps come through that door. However, trying to attract clients by setting your prices too low may result in insufficient profit margins, making it difficult to cover expenses. Okay. And I'm guilty of this one. When I first started my business, I was desperate to get business. I get it. And I set my prices too low. Eventually, when I tried to bump my prices back up to fair market value, my clients didn't like it. And it was a very difficult conversation. Rapid growth without sufficient funding. Expanding too quickly without securing adequate working capital can strain cash reserves and lead to financial instability. High debt levels and poor loan management. Large debt repayments, high interest rates, poor restructuring of loans can create cash flow bottlenecks. Okay. Watch my video on working capital, which I will attach at the end of this video. Seasonal sales fluctuations. Now, businesses with seasonal demand often experience cash shortages during low season. And if you don't have proper cash flow management, you may end up in a situation where you don't even have enough cash to cover your fixed expenses. Therefore, plan ahead. Unexpected expenses and economic changes. Emergencies such as equipment breakdown, regulatory changes, economic downturn can drain cash reserves. Okay. This also applies to your personal finances. Therefore, always have 4 months worth of reserve put away in a safe nook. And you don't look at it, you don't think about it. Listen, friends, my objective is to get people out of cash flow hell. Simple as that. And you can help me in my righteous cause by simply giving me some SLC. SLC stands for subscribe, like, and comment. Okay. And by spreading the word, you can be a part in making a positive contribution in society. Right. And quite frankly, it doesn't cost you anything. So just smash those buttons and be a good person. Create a weekly or monthly cash flow forecast. I've said this in many videos. I'll keep saying it until you guys start believing Brother Manu. Okay, this does work. And this will help you. This cash flow forecast will help you anticipate shortfalls. Very important. Now, using an accounting software is also very important. And make sure you have someone qualified to do this for you. There's a lot of bookkeepers out there who are a bunch of wannabes. And now a lot of these bookkeepers are also calling themselves fractional CFOs, which is very scary, but that's a different video for a different day. Now, regularly review your financial statements to adjust your spending accordingly. And by the way, looking at your bank statement every day or once a week or once a month does not count as cash flow management. It will not tell you anything. And look, if you want to go into beast mode and you want to learn how to build, read, interpret, and analyze a cash flow statement, then reach out to Brother Manu. My thumbnail clearly says cash is king, everything else is fluff. Because cash is king, you want to get that cash in your pocket ASAP. Therefore, if you have to, offer early payment discounts. And this incentivizes faster payments. Implement automated invoicing and reminders. So every 2 weeks, whatever the intervals you feel comfortable with, send out those automated reminders. Number 3, establish clear payments with your client. Charge a late fee for overdue invoices. This is very difficult to implement and clients are very reluctant to pay this. But if you try and enforce it, next time around, they will be more mindful and they will pay you earlier. And quite frankly, for your chronically late payers, we all have them, take a percentage of the invoice up front. It's called COD, cash on delivery. If they're going to leave because of you taking some money up front, they're not worth your time or your energy. For chronically late payers, take a percentage of the invoice up front. It's called COD, cash on delivery. Okay, stop everything and hear me out for a second. Never say to yourself or to your accountant that things are not done this way in our industry. In the tech world, there's a term called being disruptive. And what that term disruptive means is that you will go in and you will revamp the way things are being done in order to make things easier, efficient, automated, cost effective, and most importantly, it should make your life easier. Now, having said all that, don't be scared of running your business in a way that benefits you. Always remember, You went into entrepreneurship to help your family and to help those who support you. You did not go into entrepreneurship to start a business so that clients can abuse you and take advantage of you. I'm going to state the obvious, but you'll be amazed at how many people do not look at their expense line at a granular level. Therefore, negotiate lower rent, supplier cost, subscriptions, right? Shift to a remote or hybrid work model in order to reduce your office space. Always base projections on historical data as opposed to optimistic assumptions. Use scenario planning, best case, worst case, and the realistic case. Use if statements. Keep a cash reserve for unexpected cash shortfalls. A lot of companies don't have a budget, or they have a nonsensical budget which should have been recycled last month. When you build your budget, always build a zero-based budget. It's the only way to build a budget. Everything else is a cop-out. If you would like assistance on how to build a zero-based budget, feel free to reach out. Adopt JIT, just-in-time inventory systems, to avoid overstocking, okay? Number 2, use inventory tracking systems to avoid excessive ordering. Number 3, if you notice that there is slow-moving inventory, get rid of it ASAP at a discounted price. Even if that means you have to take a slight loss, do it. You're better off getting some cash than no cash at all. Every quarter, minimum 6 months, do a physical inventory count. And this has to be done not during work hours, but after hours, whether it's in the evening or weekends. It has to be done when the plant is shut. And there's a reason for that. It's so that you don't want sales coming in and movement happening in the inventory, which can help you or assist in creating human errors. And the benefit of a physical inventory count, there's actually 2 benefits. Benefit number 1, it will help identify any shrinkage in your organization. Number 2, it will help identify any internal controls or operational issues within your organization. Or 3, all of the above. Conduct market analysis to set competitive yet profitable pricing, right? And focus on value-based pricing as opposed to cost-based pricing. Because what you have to focus on is the value proposition. And regularly review your pricing based on demand and cost. This is a big one. I try preaching this to a lot of my clients, but I guess we're just creatures of habit, and I really struggle implementing this. But treat your employees like profit centers as opposed to cost centers. And this will change the entire dynamic of your organization. It will change the way your employees think and the culture that you ingrain within the organization. And if you like to consult on how to convert your employees from cost centers to profit centers in order to enhance your ROI, your return on investment, then please reach out. Look, seeking business lines of credit for short-term working capital, or going to an angel investor or a venture capitalist for long-term funding, or selling your receivables for some cash. These activities are fine, right? If it's a once in a blue moon Band-Aid solution, it's totally okay. However, if you're constantly going to the well and using these tools in order to make ends meet, then your model is broken and you need help. And remember, taking debt in order to pay off existing debt is a recipe for disaster. Look, negotiate lower interest rates or extend repayment periods, right? Prioritize paying high interest rate debts first, which is called the debt snowball or the avalanche method. Consolidate loans into a monthly payment. Cool. Now, all of this points back to proper cash flow management and creating a proper zero-based budget. As tempting as it may be, you have to save your profits from peak season, okay, to cover the slow months. It's really, there's no option here. And diversify your product lines or services so that even during the valleys, the low season, you can have year-round revenue streams. Now, in addition, try and push your business towards a pre-order or a subscription-based model. And what that does is it allows for a steady revenue stream coming in, which makes it easier for you to manage your cash flow and to budget yourself. In addition, always keep an eye out for inventory that is about to expire or become obsolete. And a classic example is that guy back in June 2022 who received a fresh shipment of 1 million face masks. You've heard this in many places, and the reason why you keep hearing it, because it's a must do for everyone. Always keep 3 to 6 months of operating expenses worth of cash in a reserve. This is non-negotiable. Number 2, have business insurance. Commercial insurance is very important because you never know when the unexpected might happen. And number 3, maintain a flexible plan so that you can pivot, so that you're nimble in the event economic conditions change. Lastly, always stay on the CRA's good side. Pay your taxes on time, whether it's your sales tax, payroll tax, or your corporate or income tax, right? If the CRA likes you, life becomes a lot easier in the event you do hit a difficult patch. By implementing these 10 solutions, you will improve cash flow stability, okay, and ensure long-term financial health in your business. And remember, it all starts with a simple conversation.